All right. Good afternoon, everybody. Good afternoon, all you magnificent melon heads of the world. The closing bell has rung. Thank God. The market is closed. It was a bloodbath today. We talked about it this morning, how we were going to do an extra live stream today because we just didn't know what was going to happen throughout the course of the day. Obviously, the tariff tantrum has gone crazy throughout the market. Now, look, typically when I do my morning live streams, I try to be more factual in my headlines. I try not to be too crash bro-y. I get that enough. Like I wear it on my sleeve, my perma bear. Like I'm guilty of that. But I try to temper the enthusiasm in the headlines. I try to keep it factual. Today, we're throwing that out. Today, we are going full crash bro in the headline. And I think today justifies it. All right. So when I say markets in turmoil as global order thrown into chaos, I don't think that is an overstatement. And I think if you watched anything on TV today and you've seen some of the alarm that is in people's voices and what's been going on FinTwit, I think that is accurate because let's assume for a second that this whole thing doesn't fizzle out overnight, right? Let's think of this like an economic Cuban Missile Crisis, if you will. Right now, we're all going to bed. We don't know what it's going to wake up and look like tomorrow, all right? Not to say the world is going to end tomorrow, but figuratively speaking, if this continues and if it escalates, the economic world as we know it is over. The global order that has been in power for arguably the last 50 years is done. This has been one giant F you, middle finger up yours to globalism. And for better or worse, this is now the course that we're on. So let's talk a little bit about why I'm so doomy in my headlines today. And when I say doomy, guys, I think if all goes according to plan, big if, we come out of this eventually better off. That's a long ways off. There's a lot of pain between here and there. So around the 1970s, let's say it started around the 1970s, we made a deal here in this country, in the United States. We traded our manufacturing base, our production economy for cheap consumer crap made overseas. That was the deal. It was sold to us that we'll be better off, that you'll live better lives through this cheap consumer goods, and therefore the economy will be better. And so began the age of outsourcing. It started in the 70s, continued through the 80s. Remember the Buy American, as factories started to close in the 1980s. It hit its stride in the 1990s. In the 2000s, when China entered the World Trade Organization, boy, howdy, did that just take off. And it has stopped. It hasn't relented ever since. And now we're at a point where this deal, let's face facts. This deal, this trading manufacturing base for cheap consumer goods made in other countries with cheap labor has been very lucrative for a very small subset of the population. They have made a lot of money. And who is they? Look no further than the people who are on CNBC today and Bloomberg talking about how crazy this is, how insane this is. Who could possibly do this? Because their world, as they know it, is being thrown into chaos. They represent the people who have benefited from this. Now, the people who are doing this, the people who are doing this unwind, the people who put Mr. Orange in power, for better or for worse, are the people who have been on the opposite end of this, all right? And let's be honest, without this deal, without this trading of manufacturing and the destruction of the middle class in exchange for cheap consumerism, President Trump 1, President Trump 2 never would have happened. All right. But it has happened. And so everybody else got hosed by this outsourcing, by this destruction of manufacturing. And I think at this point, it's almost universally accepted among younger people that we, let's say millennials and Gen Zers, I'm Gen X, I cling to that. But most young people today, it's almost universally accepted that they are the first Americans who are worse off than their parents. I don't think many people would argue that. Some might. All right. And yeah, houses are bigger. We have nicer phones. Technology has advanced as it always have. I'm just talking about how hard you got to work to get how far in life or what standard of living you can maintain. I don't think anybody's really going to stand in front of this and try to argue that the youth today have it better than the youth did a generation or two ago. I think that's just nobody's going to do that. So, universally speaking, this deal sucks. All right. This trading of manufacturing for cheap stuff, it sucks. And we're out. The US has decided we're out of it. Now, again, for better or worse, that's the course we're on. And when I say the global order, for the last 50 years, we have had this global order, and it goes like this. We run great big giant deficits here in the United States, and then we give you, Europe, you, Asia, you manufacturing outsourced countries, we give you printed dollars, and you give us cheap, shoddily built consumer crap. Right. Now, once you take those dollars from us, you then loan those dollars right back to us in the form of buying U.S. treasuries so that we can keep running those deficits, rinse, repeat, and keep this train going. Well, that's kind of out the window now, because if global trade is slowing, if these tariffs are going to stop that, then all of these countries that are buying American treasuries, buying U.S. government debt, where are they going to get the dollars to buy those U.S. treasuries from if we're going to stop sending them those printed dollars in exchange for the cheap crap? I tell you what, right now, interest rates are heading lower because there's a flight to safety going on. People are selling stocks and buying bonds for safety. But when the dust settles from that, this bond market is going to have one hell of a liquidity crisis on its hands, because a collapse in global trade means no dollars to send back to the United States to buy those treasuries. So what does that mean? It means sometime between now and that medium-term dust settling loss of U.S. dollars to send back to the States, the U.S. government better stop running those great, big, giant deficits. We need to cut spending. And I'm not talking about Doge and the couple $1 billion that they identified. I'm talking trillions with a T need to be cut from spending. And I don't know if you guys looked, we do not have the political will in this country to do that. Congress has been fighting for months over just maintaining spending at 2024's obscene levels. So when I say the global order is thrown into chaos, that is not an overstatement. That is not crash bro. That is not doomerism. All right, guys, what we're talking about here, Donald Trump's tariffs, whatever they become historically known as, assuming this doesn't fizzle out overnight and we all decide to sing kumbaya and free trade reigns, this will be up there in historical terms with the Bretton Woods agreement, with the U.S. coming off the gold standard, with the petrodollar. That is how much the global financial order has been thrown into chaos. Is this the right course of action? I don't know. I can't tell you. I can tell you the libertarian in me is screaming, no, this is not the right course of action. I am a free trade guy. Tariffs are taxes. And this, let's admit it, guys, I said it on the morning live stream, this is the biggest tax increase in United States history, at least certainly in dollar value. You got to go all the way back to the creation of the income tax to get even close. And even that, when the income tax first came out, was relatively small. They just slowly built it up and made it bigger over years. We've never raised taxes like we just did. This is a monstrosity. So there's going to have to be some tax relief, especially for the middle class, in order to offset the higher prices Americans are going to eventually have to pay here. Will that tax relief happen? I don't know. See, also Congress. Like, those guys don't do anything. It's also important to point out the distinction. I have a lot of people do this. They jump down my throat every time I say tariffs are inflationary. All right. Splitting hairs over the definition of inflation. Some people say inflation is an increase in the money supply. Other people say inflation is a general increase in price levels for consumer goods. When I say tariffs are inflationary, I'm talking about consumer goods prices, not the money supply. That's an important distinction. The two different definitions of inflation are sometimes interchangeable. In this case, they're not. Last but not least, the recession here is certain. All right. I mean, we've been in a recession since 2022. 90% of the country has felt recession since 2022. I think actual undisputed recession is now a near certainty. And with recession, you generally see a decline in income tax receipts. So what is this going to do to deficits? There's no way to forecast this. Nobody knows. A lot of people are making educated guesses, some good, some bad. But we've got all this revenue the government is going to make from tariffs. Okay, great. Those higher prices, though, are going to cause a decline in global trade. So that revenue will almost certainly be less than forecast. You're probably also going to have higher unemployment because of a pullback in consumer activity. That means income tax receipts are going to come down as well. If we're going to pass some kind of middle-class tax relief in order to offset the pain of these tariffs, that means lower tax receipts also. Nobody knows what's going to happen here. Now, there's all kinds of comparisons being made to Smoot-Hawley, which was the big tariff bill. The last time the U.S. went crazy with tariffs was 1930 in the Smoot-Hawley Act, which I think most people would argue made the Great Depression much worse. Some people even say that's why we had the Great Depression. Now, here's the thing, guys. Smoot-Hawley, it might be the best example we have, but it's not even close. Nobody can look at Smoot-Hawley and say what's going to happen here. Just take a couple of the comparisons here. In 1930, 20 to 25% of the United States labor force was engaged in manufacturing. We don't actually have accurate labor statistics from back then. The estimates are somewhere around 20 to 25% of the workforce was in factories. Today, it's 8%. We have 1/3 as much on a relative basis working in manufacturing as we did in the 1930s. And the whole point of tariffs is to bring back manufacturing. So right there, Smoot-Hawley's not comparable. In the 1930s, the United States also had a trade surplus. And so when you're running a trade surplus, tariffs are freaking stupid because it discourages trade, which is making you money. But right now, the United States has the biggest trade deficit in the history of civilization. So again, Smoot-Hawley, it just falls flat. It doesn't do the job here. It doesn't tell us what's going to happen. And of course, in the 1930s, it was still a great big world. You know, most stuff was still made domestically. Today, the world is a whole hell of a lot smaller, certainly not smarter, but a hell of a lot smaller. Information moves faster. Decades of globalism have caused these economies to be so interwoven and intertwined. Smoot-Hawley does not tell us what's going to happen here. Nobody knows. This is chaos. This is the opposite of certainty. Markets like certainty. They hate chaos, and they're showing us today. And so that's the end of my soapbox. We got to look at what's actually going on in the markets here now that the markets are closed. And we've got to say hi to my man, Mish the Mod, who is with us today. Mish, how you doing today, brother?
Man, I'm doing great. It has been a crazy 24 hours.
Yeah, and let me just say before you get started,
around about 4 o'clock yesterday.
Yeah, before you get started, let me just say, guys, Mish yesterday, like minute to minute, was blowing up my phone with real-time updates on the tariff rollout. Mish, thank you so much for everything you've done for the channel this whole time, but in particular, the last couple of days. You have been Johnny on the spot all week with this data. So thank you so much for your research and your work. Now, I'm sorry I interrupted you, please.
So much information. Oh my God, so much information.
Drinking from the fire hose.
Yeah.
All right. So when I interrupted you, you were going to say something. I'm sorry.
I was going to raise your 1970s with the 1930s, but you covered
1930s
it.
As in the
Smoot-Hawley.
When we traded the manufacturing.
Mm-hmm.
Okay. Now, the only reason I would push back on that is because manufacturing peaked during World War II. So absent World War II, would that manufacturing have continued to grow? Almost certainly not.
So absent World War II itself, we don't come out of the Great Depression for another 3-5 years.
Great point. I mean, it was. I think it's pretty clear that it was the war that pulled us out of recession. Not that wars are like expansionary. Just
well, that's how we became the powerhouse in manufacturing after World War II, because we leveled the shit out of Europe. There was nothing left. Russians coming in, we're coming in through the other side. We just bombed everything to the middle, to Berlin. So we then turned that wartime manufacturing into consumer manufacturing and sent everything to Japan and Europe.
Yeah, and our factories weren't targets in the war because we were fighting on the other team's home field. So we had that established manufacturing capacity that we had just blown up in Europe. So there was nowhere else for the world to turn. Wow, good point. Good point about the 30s. And well, let's take a look at what's going on in the markets here, shall we? Guys, look at the S&P 500. This is a long-term chart. We are looking at daily candles right now. And in particular, I got to point out here, look at that red candle today. I mean, the red candle doesn't even do it justice because you got one of those big gaps down at the open. You see this whole big dead space here. That's that's everything we lost last night. So even the size of that red candle doesn't really do it justice. But the S&P right now down 274 points on the day, 4.84% decline. Biggest one-day decline since 2020. What a year that was. Biggest one-day decline since then. Now, another thing I really want to point out here, guys, is take a look at this chart because this sell-off started in February, and then we hit a little bit of a bottom. We had a relief rally, the dip buyers. We came up to the 200-day moving average, and that's when Dikembe Mutombo showed up and said, no, not in my house. Rejected the 200-day moving average, and we have been selling off ever since, culminating with today's sell-off. Guys, this chart is ugly. This is very ugly. That rejection of the 200 line can't be overstated. And on the 1 minute candles, I just want to point out, here's this morning. These are now 1 minute candles. Let me get my brush back on. Here's Tom Lee and his dip buyers. All right. They showed up at lunchtime, as they're apt to do, at about 11 o'clock to about 12:30. There was a little bit of dip buying, but what a pathetic effort by the bulls today to try to recover from this sell-off. They ran out of gas real fast, and the market ended up closing on the lows of the day, accelerating to the downside into the close. Ugly day in stocks. The Dow, same thing here, down 1,679 points to 40,545 on the Dow Jones at the close, closing at the low of the day. Chart looks a little bit better. At least the breakout above the retest of the 200 took us a little bit above it before we fell back below. So the Dow has been outperforming somewhat here. I use that term loosely, but even the Dow chart looking pretty ugly here, well into correction territory. And something else I want to point out about the Dow, let me refresh this so we make sure we have the most accurate data. Oh, me and my big mouth, I just messed with things. Where is it? Here, this is all of the Dow components. Let's set this to percent change of the day. We had a couple of stocks were green today in the Dow, only a few. United Health, McDonald's, Johnson & Johnson, Amgen, Procter & Gamble, Coca-Cola, Verizon. That's it. All right, you had Merck was almost positive, down a fraction of a percent. But look at those names. What do we got? 7 names positive. 1, 2, 3, 4 of them are healthcare names. I don't think there was really any bullish news in the healthcare sector today. I think that was just people looking for a safe place to park their money, figuring healthcare wouldn't be affected by tariffs. So really the only stocks that were up today is people who didn't know what the hell else to do with their money after they were selling everything else. And then some of the other names like your McDonald's, your Coca-Cola, those are consumer staples that get most of their sales here in the States. So I'm not surprised to see those doing well also. That's like the only silver lining in this Dow cloud. Now, looking over at the NASDAQ, leading the way lower, the tech wreck, the tech sell-off, absolutely brutal. 1,050 points lower for the NASDAQ, nearly 6% sold off today. And again, there's Dikembe Mutombo rejecting the 200-day moving average a couple of days ago. The NASDAQ is only a couple of points shy now, about 1.5% shy of bear market territory. Well into a correction, quite possibly the bear market. So stocks just absolutely bludgeoned today. Now, the dollar staged a little bit of a recovery this afternoon. We ended up closing around 102.14 for the DXY, down 153 basis points. Terrible. But this morning when I went live, we were down by more than 200 basis points. So the dollar did recover a little bit. Now, Mish, you had something that you noticed about the dollar's recovery today, wasn't there?
Yeah, when I was looking at the recovery happened after the markets closed in Europe. So what we're seeing here is some domestic movement from the hedge funds, and we'll have to wait until 8 o'clock Eastern when Nikkei opens back up and their foreign exchange to see what happens.
So it was you had the reason the dollar was weakening so much, right? You can see it in the other charts. You see it in the yen chart. You see it in the euro chart. You had money going home today. Mm-hmm. That slowed down, maybe even stopped a little bit when the markets closed over in Europe, and then the dollar recovered a little bit. But who knows when Japan reopens? Maybe we see that resume. So we could be looking at a much weaker dollar this time tomorrow morning.
Yeah.
This time tomorrow morning. Does that make sense? Tomorrow morning.
I
You could be looking.
Well, I was a little surprised when I woke up this morning and it was 220 basis points. I was like,
yeah, major weakness in the dollar. And again, it was all yen and it was all euro. We showed this one today or this morning. The USD JPY chart. The yen is at 146.3. Significant strengthening of the yen today. That's yen carry trades unwinding, folks. And that's
that's what this tells me. This whole thing here, just looking at how much the forex is moving, and looking at watching bonds and watching gold, right? Because we're supposed to be doing this risk trade going to bonds and gold, but it's kind of, but not as much as you think it would be, based on what happened in the Dow today. But then you look at forex and you go, well, that's because half the money they're selling is going back overseas right now.
Yeah,
So
and it's going back overseas to repay debt in a lot of cases, isn't it? Because could you look at this and say this is a deleveraging happening, right? Borrowed yen.
Yeah, because as the long term, what you were talking about in the intro is long term, the money's, we don't send as much money overseas because of the tariffs, right? We buy it local. There's less dollars in the system for these bonds and these debt that is in dollars. So a scarcity, and I think Dixie's gonna come down for a while, and I think it's gonna shoot back up on scarcity.
A stronger Dixie coming out of this. Well, if we really do get a deleveraging, that's conceivable that we get that stronger dollar. I mentioned this in my interview with I did an interview with Jesse Day yesterday over at the VRIC channel. It's not going to air until Tuesday. But I talked about the rising money supply for the last year and a half. The money supply has grown by about $1.2 trillion, even as the Fed has been engaging in QT. So that has been leverage building up in the system. And during a deleveraging, dollars become more scarce and they increase in value. So it's entirely plausible that we could see a Dixie spike, even though the reaction today was the Dixie moving sharply lower.
Well, and Bessent's on the record saying that he wants a strong dollar. So this was not the way to do it. If this was his intention, I think it's a longer term thing they have going on.
And I tell you what, if you're trying to bring manufacturing back to the United States, which is their stated goal, the stronger dollar is not how you get that. That's for sure. Because stronger dollar makes U.S. manufacturing less competitive than overseas manufacturing. So, with Secretary Bessent over there, this may be the second reference here, but it's a little bit like asking a woman what she wants for dinner, right? The secretary's not sure what he wants over there, is he? Do you want a stronger dollar or a weaker dollar, Secretary Bessent? I don't know. What do you want? By the way, the euro chart, same shape as the JPY chart, guys. Big strengthening of the euro today. Also, I'd point out the big wick on that candle. When the European markets closed, we did get a little bit of a recovery there. We'll see if this continues tomorrow. But Forex has been messy today, to put it plainly. Now, before we get too far ahead, I got a couple people I got to point out and say thank you to. We got JJ Watt. What's going on, brother? He says, plot twist. Trump's plan is to slam the markets down, and then says the only fix is for the Fed to lower rates ASAP. Checkmate Powell. He
brings up a good point. Yeah, I want to start with this one. Yeah, he brings up a good point. I think I went on record about a month ago that they're going to do a hike by the end of the year. If they keep these tariffs the way they are, we're going to see 150 basis point, 200 cut by the end of the year.
Yeah, I agree. I don't think we see a hike. I don't know about the cuts. I really don't, because they've already downplayed the inflation impact of the tariffs, but we're going to have CPI prints pushing 5-6% in a couple of months here. The biggest input is housing. Housing won't be immediately affected by the tariffs, but consumer discretionary stuff, core inflation is going to rip higher eventually. All right. Again, we're talking about price level, not money supply. It's going to be really hard to cut into that environment. It's going to be hard to explain it. That's not to say they won't. The other thing is Powell cutting to rescue Trump. I don't know. The two of them have not always been on the same page, have they?
What I'm thinking is this slowdown is going to happen. We'll put jobs out there, and he's going to have to do it because the unemployment is going to push him to do it.
Yeah, I agree. I think unemployment's heading higher, and this is definitely going to accelerate that. Good time to plug the show for tomorrow morning, by the way. We got non-farm payrolls tomorrow morning. That's going to be another market mover. And I said it this morning, guys, we really need a good print from jobs tomorrow for this market, especially when we're right on the brink of a bear market in tech. Market could use some good news. Tune in 9 a.m. tomorrow right here on Nobody Special Finance for our daily live stream where we talk about that. Shameless self-promotion. So checkmate Powell. I don't know. Do you think Powell is checkmated here, or is he being forced into make a move?
I think he may be. I don't think Powell cares about the market. At some point, the market going down will negatively impact, and that's when he starts caring.
Yeah. At the stock market, I don't think Powell cares too much about. The bond market, the functioning and liquidity, that he cares about. So
yeah, if the bond market, if someone decides to dump $200 billion tomorrow on the bond market, betcha we buy bonds tomorrow.
But we're going to get to this in a minute, JJ. You'll see at the moment, because of the flight to safety that's happening in markets, there is, at least in the short term, ample liquidity in the bond market because it's all coming out of stocks and it's running for cover in bonds. Thank you, JJ, for supporting the channel. What's going on, Armando Reyes? He says, question, if you had to choose, would you rather impose tariffs or ban products that don't allow the imports of American products? Are we being forced into arbitrary binaries here? I don't know. I don't like either of those options. Let me just say, when I was in nuclear and whenever we were giving a presentation at any of the committees, if we were asking for money or if we were talking about a problem with some equipment, we always had to include option C, do nothing. What happens if we don't do anything? And I think we've got to include that here. What about do nothing? You got to mention it. What happens if we just don't do anything? Don't pump liquidity. Don't keep raising government spending. Just do nothing. If we sit back and do nothing, we get the same result we got today. It might take a little longer to get here. So maybe that's a dodge. But go ahead, Mish. Take a shot at this one. What would you rather? And I'll give you the same option C that I helped myself to. You have that one as well.
Here's the problem with this binary choice. It really leads you down to have to choose to impose tariffs or ban products that don't allow imports of American products.
I think he means ban products from countries that don't allow imports of American products.
And that's kind of leads me to what happened in Vietnam, right? There was a 96% imposed tariff based on the formula that Trump came up with. So we were putting 46 on them. So that's the question of, do we care enough to import an extra 120 billion from Vietnam?
Yeah, and Vietnam, by the way, that's you pointed that out. It's a de facto tariff on China, right? A lot of Chinese firms have set up shop in Vietnam to try to circumnavigate those tariffs.
So allow imports of American products. I don't know anyone that actually outlaws, except for maybe Myanmar or a couple of those juntas out there. So sure.
Yeah. And again, the libertarian in me is screaming, I don't like either of those options. Should the government ban? No. Anything? No.
Should the government? No.
I'm not a big fan. Yeah. You don't even need the word. Should the government? No. So I got a lot of negativity from me there, which is unusual. Thank you very much, Armando, for supporting the channel. And thank you to Dominican Trader. He says, funny how Buffett sold at the top before this happens. Insider. I tell you, Buffett's looking pretty wise today with his $370 billion pile of cash. We won't know if Buffett is buying until the 13Fs come out. And the 13Fs don't come out for a while. So right now, Buffett, as far as anybody knows, is still sitting on cash. Actually, Buffett, up until the last 13F, has been selling. He bought some, I forget what he actually bought. There was like two names that Buffett was buying last quarter. I can't recall off the top of my head, but he's still a big time seller of pretty much everything. And man, is he sitting on some cash, 370 some odd billion dollars.
I wonder if he deploys. I wonder if he deploys on a day like today, or let it sit out for another day, see what's going to happen.
Today is one of those, I don't think Buffett is catching this falling knife. Let's just put it this way.
Yeah.
Maybe he takes little nibbles here and there, but something tells me, I mean, look, guys, they just announced this stuff last night. This is early innings. Anybody who's out there saying the tariffs are priced in or any kind of crap like that is just repeating some crap they heard on Bloomberg and trying to pass it off as their own thought. Nobody knows what's coming out of this. There has not been a jolt to the system like this in a long time. But I agree with your sentiment, DT. Buffett looking pretty wise right now. And Armando's back again, says, I can't believe that Rand Paul introduced a bill to override and undermine Trump by removing the tariffs imposed on Canada. Talk about a traitor. I don't use the word treason there, Armando. I can't. I'll tell you one thing about Rand Paul. He sticks to his guns, and he is not afraid to go against the party. All right. And Rand Paul is a libertarian, small L first, Republican second, and tariffs is an allergy to the libertarians. So I am not surprised in the least to see Rand Paul doing this, because Rand Paul is singing the same tune he has always sung, and he's not changing it based on his guys in power. Now, I'm not saying it was the right thing to do for Paul, or, like, obviously he's going against the party here, but just for a second, imagine if more congressmen didn't just toe party lines and actually spoke their mind, maybe things might be a little bit better. That being said, the time to debate should we or shouldn't we with the tariffs is over. We are in this war now. This war has started. So there's no, like, when you're in the battlefield getting shot is not time for give peace a chance. It's time to either shoot back or duck. All right? Like, the time to debate is before the war starts. So I do agree with that sentiment there. Thank you, Armando, for supporting the channel. Welco Services. What's going on? I hope I pronounced that right. Welco says, hi, I'm from the government, and I'm here to help. Out, damn spot, out. 10 most dangerous words. Yeah, that's right up there with I just want to be friends, isn't it? Yikes. Oh, man. Or when the doctor says, you might feel some pressure here. That means hold on to your seat. This is going to hurt.
Yeah.
Thank you for the laugh, Welco Services. I appreciate it, sir. All right, let's carry on through the bludgeoning that the market gave us today. We were talking about the bond market. Look at that ample liquidity in the bond market. Yields moving lower today, guys. That's bond prices heading higher. Plenty of bond buying. Secretary Bessent got his lower rates today. He didn't get all of the lower rates. It's still kind of a muted move. I mean, for the scale of the perturbation to the system today, even a 20 basis point move in yields seems a little bit muted to me. And that's a pretty, that's maybe an understatement there, but 30-year treasury, 4.470, down 8 points. 10-year, 4.036, down almost 16. The biggest mover today, the 3-year, down almost 23 points at 3.659. The 2, 3.692, down 21 points and change. And, oh, look, the 1 month is flat, so we got that going for us. No change at 4.312. This is a flight to safety, guys. If you're wondering where's all the money going that's leaving stocks, it's going to Japan, it's going to Europe, and it's going to U.S. Treasuries. You know where it didn't go today? I'll tell you where it definitely didn't go. Was gold. Look at the commodities board. Gold down $22.69. Lower rates, weaker dollar, and cheaper gold. I don't know.
The cheaper gold's weird, but I really think that the unwind of the tariff trade, because bullion was accepted, right? There's no bullion tariff. So I think there was some front running that, because the really big move was in the spot, where it's not the spot, it was a 1 month ahead.
Yeah.
And I was telling Jack last night, that divergence in silver was like over $1. So I think people were really betting on tariffs, and when that happened and no tariffs on bullion, it crashed, and then you get this run from the dollar, and the gold's like struggling, but it kind of turned that corner.
And we mentioned deleveraging earlier. With the monster run that gold has had recently, and then the sudden slamming shut of the door on that whole bullion tariff question, it's possible you had a lot of deleveraging going on in the gold market today. You probably had a lot of levered long bets that were unwinding here, didn't you? And now,
yeah.
So
and it's the silver crashed today, right?
Yeah.
I can't imagine the
double
calls
whammy
got at 2:00.
the silver, the double whammy of number one, the monetary element in the sell-off. You probably had levered long bets in silver, just like you did in gold. And then you've got the industrial problems of the slowdown in global trade. So silver candle burning at both ends today, a $2 move. And you mentioned, Mish, the difference between the front month and the spot price down to 8 cents on silver. That was approaching $1 not too long. It was over $1, wasn't it, a few months ago?
So yeah, I think that was from front loading there, and gold got the save of risk that pulled it out from, because gold was headed south, like silver was, and it got picked up.
Look at the gold chart. I mean, and this is the second time today. The feminists are going to be all over me for this, but this is the chart of, honey, what do you want for dinner? This is gold. Tariffs were announced last night around 4:30. All right, the volatility hits, but gold starts rising. Gold's like, yeah, tariffs, baby. You know, flight to safety.
Yeah.
New all-time high, 3168. I mean, we were pushing 3,200. All right, then came back down to earth. It traded flat. And then overnight, I don't know what happened, man. Midnight, people start selling gold. And then 5, 6 a.m. this morning, all Eastern times, by the way, bam, look at this sell-off in gold. And everyone's like, wait, what? I thought the tariffs were good for gold. What? Oh, my God, stop it. $120 intraday swing in gold today. And then, of course, as soon as the markets go ding, 9 o'clock, everybody's like, change my mind, back to buying. I don't know, honey, what do you want for dinner? Down we go again, and then we end up closing the day off $25. I think we just got to let the dust settle here in gold. I don't know. That's the best thing I can tell you with gold. I can tell you, I got Bob Coleman coming on the channel. We're gonna talk tomorrow. I'll either run that tomorrow night or probably Saturday morning. I'll publish that interview. Bob Coleman is going to come on the channel and help me make sense of whatever that open interest thing was that happened on Monday, and then whatever the hell this chart is telling us, and then where we go from here. Bob is a very knowledgeable guy. He's been in the gold market for a long time, so hopefully he can tell us a little bit about what's going on. Also, something I want to point out, we're going to skip past the other metals, which were all down today. WTI crude down 7% at $66.62. I talked about it in the morning live stream. The OPEC production increase that was announced this morning, this news got buried in the headlines of tariffs, but the OPEC production increase was triple the expected amount. The Saudis are increasing oil supply into a global recession. I don't know. We retaliating at American oil producers for the tariffs here? I don't know what to read into that. But
a little bit. I think that's a little bit of pressure, right, to push it down. But it was kind of a double whammy, right? Once people kind of got that from OPEC, and then people started realizing, well, this is going to slow everything down, so they're not going to need as much. So now we're back into glut position, and oil just realized, oh my God.
Yeah.
So
now we got to. There's your bear case for oil. I think we're remiss if we don't mention the bull case for oil. We've got 2 carrier groups in the Indian Ocean. Mm-hmm. We've got a fleet of B-2 stealth bombers at Diego Garcia, ready to strike the Iranians right now. The Houthis are lobbing missiles left and right. Israel and Hamas are back at it. So the bull case for oil, the Strait of Hormuz possibility, that is out there as well. Oil's tough here. Oil's always tough, but
do we go into Yemen? Do we go into Yemen to finally knock them out?
Oh, what? Boots on the ground? Hell no.
Yeah.
Hell no. I up until a few years ago, I couldn't find Yemen on a map. I'm not going to go. I'm not willing to go bleed and die in the desert in Yemen. I'm not going to send some other poor schmuck to do it for me. I certainly don't want to be on a ship getting hit by missiles with shrapnel flying everywhere. Heck,
I mean, that's the only reason we got the B-2s down in Diego.
Yeah. So and by the way, you know, the Houthis have been attacking our ships a lot. They've been doing a pretty piss poor job of attacking our ships. Our Navy has performed admirably in the Indian Ocean and the Red Sea. They've been perfect. They must continue to be perfect, because one U.S. warship gets hit by a missile will be a political CF. One.
Yeah, just one. All it takes is one.
And demanding perfection from 18-year-olds standing watch on the deck of a boat, like, I don't know. maybe I'll avoid that soapbox. maybe we'll just move right on. All right, we talked about gold. Bitcoin didn't like things today. Down $600 is priced on Coinbase at 81,876. Certainly
That's
well
a
off of the
reset.
highs from yesterday. Go
I
ahead,
was going
Mitch.
to say that's a reset. It was down thousands today.
Oh, okay. Yeah. I mean, in the morning, it was, we were up 88,000 yesterday, 82 this morning. Now we're at 81 and change. All that being said, like, compare this chart to, these are daily candles. Compare this to the NASDAQ. Bitcoin is actually holding up today much better than I thought it would have. It didn't do well today. It's off by thousands. But Bitcoin kind of, I don't want to say outperformed. I'm surprised it's not down more. Let me put it that way. I don't know what to take away from that one, but I thought we'd be a little bit lower than this. Now, let's talk about a couple of the individual names here. Look at Nike. Let me refresh this, make sure we get the most up-to-date. Nike down 14.44% today, leading the way lower in those names. Look, clothes manufactured overseas, totally susceptible to tariffs. Nike, look, the last year or the last 5 years, let's say, Nike has had a rough go of it since 2021. This was $173 stock at the height of 2021. Other names today that were taking it on the chin. Apple down 9.25%. We're talking about a $3 trillion company down 9.25% in a day. Take a minute to appreciate how much money that is that just evaporated with this sell-off today. I mean, that is some serious wealth destruction right there. 9% of Apple in a day. All of the Mag 7 were down today. Let's take a look at Amazon, down 8.9. Oh, so let's round it up to an even 9, shall we? 9% lower for Amazon. Again, $1.9 trillion company down 9% in a day. Guys, money is just burning. Let's look at Google. Google down, all right, a more respectable 3.9%. Google actually outperforming the broader index here. That's interesting. Then you got your Meta. They just love to burn money over at Meta. They're down 9% also over at Meta. And last but not least, this is an important one because keep in mind, Google outperformed the index and Microsoft down a very respectable 2.3% today.
Well, that's on that news that they're cutting all that data server money.
That is very astute observation. Investors have rewarded Microsoft for scaling back their data centers by outperforming. I'd say massively outperforming. I mean, they're still down, but the NASDAQ's down like 6-7% here, and Microsoft's down 2 and change.
I'd rather have the 2 and change than 9.
Yep. So investors in Microsoft seem to be happy about the scaling back of data centers. Look out, NVIDIA bros. Watch out, guys. The great game of CapEx chicken is coming to a close. And remember the second best performer in the Mag 7 today was Google. And we talked about on the morning live stream today, that deal that Google is cutting with CoreWeave and how I think the market was misinterpreting that. I think you could interpret that as Google plans to scale back their data center investments, and they would rather just pay to rent from CoreWeave rather than burn billions of dollars to build their own. And when I look at Google performing almost as well as Microsoft today, maybe that is what's going on there. By the way, the one name I didn't go to in the Mag 7, I'm remiss if I don't. Well, the two, I didn't mention NVIDIA. Tesla, 5.5% down pretty much in line with the broader index. And let's do NVIDIA while we're at it. NVIDIA down 7.8%. By the way, NVIDIA just barely clinging to that $100 threshold there. Not looking good on that chart.
Do you have Intel coming up, or?
I do. We're right there. And Mish, again, I have to commend you because it was just a couple of minutes before we went live. Mish calls me up, says, check out Intel. I would not have had this one queued up for the stream if it was not for Mish. So thank you, sir. This one of the few stocks in the world that's up today. Intel and Taiwan Semiconductor tentatively agreed to form a chip-making joint venture, the information reports. Now, before we get too deep into this one, I have to say, this is the information again. I keep coming across this website. Jim Cramer keeps calling them a rag. I tell you what, the information has been freaking money this year. These guys, this website, And I may end up just biting the bullet and paying for this one. And I don't know if you guys realize I am cheap AF. I hate paywalled websites. But man, these guys have been so good this year. And when I see Jim Cramer constantly saying they're a rag and misinformation and fake news, and they've been right about everything, maybe they should get my money. And today they were all over this one as well. I don't know, maybe a little bit of capitulation. The timing of this announcement can't be ignored. Intel and Taiwan Semiconductor recently reached a preliminary agreement to form a joint venture to operate the U.S. firm's chip-making facilities. The information reported on Thursday, citing two people involved in the discussions. Taiwan Semiconductor will take a 20% stake in the new company. Shares of Intel were up nearly 5%, while U.S.-listed shares of Taiwan Semi were down about 6%. Obviously, the tariff news weighing on Taiwan Semiconductor.
Well, that means that they're going to give Taiwan Semiconductor is going to give the technology to Intel to run all these really good chips in the United States. That's what that tells me, because Taiwan Semi is going to take a 20% stake, right?
Yep.
So they're going to take just enough to kind of get some payback for giving up the technology.
And they're going to operate as well. Mm-hmm. So it's almost a service level agreement, right? There's certainly going to be some technology sharing between Intel and Taiwan Semi. But Taiwan Semi, who's better at running a chip factory than the world's chip factory? So great deal for Intel here. Now, Taiwan Semi, they're going to get clobbered with tariffs, so they need to figure out a way to make money in chips sold to the U.S. one way or another. This is a good way to do it, owning a 20% stake in this joint venture. That being said, Taiwan Semiconductor is in big trouble with these tariffs. We haven't seen yet what they're going to do to semiconductors. That's one of those categories that was exempted from yesterday. But there are semiconductor tariffs, chip tariffs coming. We just don't know what they look like yet. If we use yesterday as a gauge for what they might look like, yesterday was worse than the worst estimates. So they're probably going to be pretty big.
Well, yeah, because, and then, I called Jack earlier. We've talked several times today that bullion kind of got threatened a little today when they said they're going to open up tariff investigations into critical minerals. We don't know what critical minerals are yet.
Yeah, I mean, hey, silver's pretty critical to me. Hey, I'm all about making the shiny go higher. But yeah, I'm not sure. I'm not sure what does critical minerals even mean. Rare earths, tungsten, gold, silver, copper. They're all critical to somebody. Yeah. Just more vague announcements. One other point I was about to make about this, I can't. Shoot, I lost it. Here's a question for you. Let me ask you this, along the lines of the would you rather that we got from was it JJ gave us the would you rather before, or I think it was JJ.
No, it was Armando.
Armando. Okay. Would you rather, or what? Which was it? Who done it? Is this Joe Biden's stick or Joe Biden's carrot, the CHIPS Act? Or is this Donald Trump's stick, the tariffs, that's driving this? Because Intel and Taiwan Semi have kind of been flirting for a couple of years now, haven't they? Right? There was a twinkle in their eye when the subsidies were dangled in the CHIPS Act, but they never actually got it done. They were constantly talking about plans and then scaling them back. And then here we are a day after the mother of all tariff bombs gets dropped in the world. And okay, that deal is inked. I mean, it's probably both, right? I don't think any one really did.
I think people are starting to see the writing on the wall that it was coming, and it sounds like Intel was straight up says, "Hey, we'll give you our name if y'all want to come over here," right? Because essentially that's what it is, right? They're using the Intel umbrella to open up factories here.
Yeah, the Intel umbrella will open the factories. Taiwan Semi brings their operational know-how, right? They're going to be paid a premium to run them. Intel will build them.
So are they still going to get chips money? I don't know. I've seen it waffle a couple times on whether or not they're going to pay out chips money. So they may still get some.
And President Trump has threatened or at least pushed to repeal the CHIPS Act. He needs Congress to do it. But he's pushed for that. Now that this is happening, do you mess with it? Do you go repeal the CHIPS Act now that maybe we finally get a factory built?
Yeah.
I tell you, one of the things we haven't yet talked about in the context of this tariff debate and the idea of restoring American manufacturing, the military aspect of this, of manufacturing, the big advantage the United States had in World War II, we were talking about that earlier, was we had the manufacturing base. We could build tanks faster than the Germans could blow them up. All right. And my grandfather was a tanker in World War II. He was a tank commander in a Sherman. The German tanks were vastly superior to the American tanks, but they were far more complex and far more expensive, and the Germans couldn't make them fast enough. Now, let's compare today. America's Navy, far more complex. I don't think anybody would argue it's highly technologically superior to, say, the Chinese. But you know what? The Chinese can make ships really fast, and we can't. So if World War III were to break out, we're like, from a strategy, from a pro and con perspective, we are more resembling the German economy in World War II than we are the American economy in World War II. We need that manufacturing capacity back. I mean, not to mention all our medicine is derived from China, ordered from China, but all of these missiles, all of these chips, everything that goes boom in our arsenal has a semiconductor in it. And without those chips, which, by the way, the chips right now, most of them are made in the biggest bullseye in the world, Taiwan, we won't be able to rearm our technologically superior ships for more than a few weeks if that fight were to ever break out. So this needs to happen fast. Honestly, like, in the interests of world peace, we need this to happen, because this weakness in manufacturing could trigger the war. If the Chinese think they'll win, they'll go. So that's another soapbox issue there. By the way, we're falling a few behind again. This name kills me every time. Ewok Jerky. Nub nub. It's not B2. It's a Freedom Dorito. Is that like common language in the military? I've never heard that before. A Freedom Dorito. I love it.
Freedom Dorito? Yeah.
Thank you,
Ewok. A lot of weird
Jerky.
names for a lot of stuff.
Freedom Dorito. Thank you, Ewok Jerky, for the laugh, both at your name and the Freedom Dorito. I'll never forget that one. That's a great one. And also, thank you so much for supporting the channel, sir. You are a gentleman and a scholar. Armando is back. He says, I'm glad that I'm 45. I won't be drafted. Did we draft 45-year-olds in World War II?
Nah.
We didn't go that high?
I think they went up to 35.
All right, I'm 45. I am no longer subject to the draft, so now it's safe for me to be pro-war. All right.
If they pull me back in, they got to promote my ass.
Let's go to war with everybody now that I know I'm not going to get drafted. I am of a similar stature in years, an exactly similar stature in years, I might add, Armando. So 45 years young. Enjoy the back nine, brother. That's all I could say. I'm right there with you. If you hadn't already figured that out by the boat slips and the big bald spot that you can't quite see. But I think the glare comes off the window and back into the camera from the bald spot.
I've seen this thing that a lot of millennials can't afford a midlife crisis right now.
Yeah, how you going to buy? You can't afford to buy a vet if you're, I don't know, maybe like a really nice avocado toast. What's the millennial midlife crisis spend? Is it like dog mom? I can't afford to have a family. I can't afford a car, so I'm going to get
it's probably Tulum for 6 months.
Tulum? Where's that?
It's in Mexico.
Is it in Mexico? Okay. Can you tell I don't get out much? Mish, I live vicariously through you and your travels. I like it where I'm at.
I almost went to Tulum off season just to see what the hell. I was like, I couldn't do it.
What do you call the
deep
people
in my heart?
Are they Tulums? Are they Tulumian? The Tulumites?
It's just south of Cancun.
Okay. Anyway, well, thank you very much, Armando. Appreciate that. Congratulations on your lack of draft risk. Will Yang, thank you, sir, for supporting the channel. He says, have you seen iShowSpeed's China stream? No, I have not. Homework for the weekend.
Yeah, I'm not familiar with that name.
iShowSpeed's China stream. No, I haven't seen that, and so I can't comment on it. I don't know if Will, let me know in the chat if you can tell me what the subject is. Maybe I can comment on it. But in the meantime, that's on the homework list for me to check out. So iShowSpeed's China stream. By the way, while all this is going on, you know what we haven't heard about, speaking of China, in a long time? The real estate crisis, the property crisis in China.
I was just thinking about that, with stocks banging down, are they going to start having collateral problems? Because, we learned with Evergreen, that guy was, basically saving his life by selling everything he owns and giving it to the company. And he got to walk away to a retirement house. He lived, right?
Oh, that
So
was the
CEO.
Evergrande CEO. Yeah.
Mm-hmm.
Yeah. Hui Kaiyan, I think was his name.
So he supposedly had $20 billion worth of stuff. Well, he ended up getting like 6 for it. Because when it's a fire sale, baby.
But they never did liquidate Evergrande's assets. They still haven't done it. They're still holding that crap on their balance sheets, pretending it's worth what it ain't. It's amazing. And here we are talking about a global deleveraging in Japan, in the United States, and Europe. Well, what the hell is China going to do? Mm-hmm. And if global trade is going to slow, where is China going to get the dollars that they need to service their much dollar-denominated debt that they took out to build all those magnificent cities that nobody lives in? Mm-hmm. That is a problem that lingers for China. It's unanswered. They swept it under the rug, and then under the rug. It's still out there, guys. I don't know what the heck they're doing over there. Thank you, Bill Yang. I'm not sure. Oh, here he says, maybe you should check it out. I will check it out, Bill. Thank you for the tip, and I'll let you know after I see it. And Armando's back again. He says, will China be taking back Taiwan in the next 4 years, and will Trump defend Taiwan? Let's talk about the first part of that question first. Everything I've read, all of my research, all the military papers, and I have read a lot of them about that, says 2027 is go, no go. That is the point. After 2027, because of the population collapse and the economic malaise in China, they will not be able to do it. They'll be in their domestic problems will be too big. They won't be able to go. So it looks like 2027, if we can get past 2027 without this thing kicking off, at least the worst is behind us. It doesn't mean we're free and clear, but that is the highest risk. So that's the will they, won't they? By 2027, we'll probably know, which isn't that far off, by the way. It's 2 years out. And the Chinese right now doing live fire exercises in the South China Sea all around Taiwan, right? It's all about practicing for a sea blockade of Taiwan. Will Trump defend Taiwan? Big question, right? You look at Trump's approach to Ukraine, you would say, no, he won't. Look at Trump's
feels
approach
differently
to Yemen.
About Taiwan for some reason, If you have to pick a bad guy right now, it's more China, right? So does he defend? I kind of think he does, at least in the outset.
Yeah, I mean, I
don't think we're going to come to the rescue by any stretch of the imagination, but we'll put a carrier on station and help them out.
There are certain things that we could do that maybe don't involve direct military conflict, right? We could blockade the Panama Canal. We could blockade the Malacca Strait and just say no Chinese ships get through. And there is nothing China can do about that. Nothing. Because China doesn't have a blue water navy. They have a very big green water navy, which can operate in, close to shores like between China and Taiwan. So if we were to blockade the Malacca Strait, that would absolutely cripple China economically. No oil, no food, no manufactured goods get in or out of China if we do that. That would put immense pressure on China not to do that. Would that deter them? Almost certainly not. Have you seen? I mean, China's like Russia in the amount of casualties they have historically demonstrated that they're willing to accept in order to achieve their ends. So that would help, but it wouldn't stop them. Would we outright commit carrier groups and fighters? I don't know. I really don't know. And Trump is unpredictable. It's very hard to say if we would or wouldn't. And that being said, Taiwan is not going to be a pushover. Taiwan has the benefit of geography. They've got a 90-mile moat around them. Imagine if the Russians had to cross 90 miles of water to get into Ukraine in the first place. Would have been a pretty different war in Ukraine, right? And we don't know how China can handle logistics. We've seen how they handle commercial logistics. They're very good at it. But China has no combat veterans whatsoever anywhere in their military. So we really don't know what they're capable of. There's a lot of propaganda, but we've just never seen it. Chinese equipment's never been in combat. So that's a big question mark. Let's hope we never get answers to these questions. That's all I can say. Thanks again, Armando. Grandpa, Melonhead member for 13 months. Thank you, Grandpa. It says Japan will defend Taiwan. Now, Japan definitely has an incentive to, right? Those Senkaku Islands that Japan claims, they extend awful close to Taiwan. And Japan.
Yeah, you get into that self-defense treaty, on what they can and can't do. So, yeah, it'll be interesting.
Japan is building missile bases on the Senkaku Islands, which get within a few miles of Taiwan, right? That's Taiwan's northeastern flank. And the Japanese are building ballistic missile bases there. The Japanese are now fielding, they don't call them carriers, but they're essentially small aircraft carriers. I think they're actually calling them, they're calling them like heavy destroyers or something. But they're small flat tops that can handle F-35Bs and Harrier jump jets.
Yeah, but only like one or two of them. It's like they have that old thing where they always carried a plane on some of these ships.
Yeah.
It's almost like you can put one or two on there. I've always heard those called Jeep carriers.
Yeah, it's more comparable to like our amphibious assault ships, right? Mm-hmm. It's not a super carrier. It can't handle a wing of 125 planes, but you could fit a squadron of F-35Bs on it. Yeah. And actually our Marines are training to take off and land from these boats currently, because the Japanese haven't ordered their F-35Bs yet. So they're basically platforms for our fighters to take off from. I don't know how useful they're going to be to the Japanese.
South China Sea is a mess right now. I don't think we follow it near as enough, but there's so many territorial disputes going on in South China Sea right now.
Yeah, China has their 9-dash line. They basically claim everything. I mean, kind of like we have our Monroe Doctrine. We were talking about this earlier. We basically like this whole half of the world is ours. China's kind of the same way in the South China Sea. The Philippines, they have the same approach to the Philippines, which is why the Filipinos have been cozying up to us, letting us expand military bases on the other flank of Taiwan. Same thing going on there. So again, let's hope these things never actually happen. But I think Japan is one of those countries that would come to the aid. Also, Australia is one of those countries that would likely come to Taiwan's aid just because of their proximity. The big question also here is India. If India does what I think they're going to do, they're going to stay out of it, let us kill each other, and then they'll rise as the world's sole superpower.
Now, India got 30%
of the world's population, right?
No. 30% tariff.
Oh, India just got a 30% tariff. I was talking militarily if it came down to the Taiwan thing.
India can't do any kind of power projection.
Yeah.
Right? If it's not on land border, yeah.
But they share a border with China. They're a huge, huge population. They do have one super carrier. They're one of the few countries in the world with a super carrier. So it's plausible and a question mark. And they're an emerging superpower. As China's population is declining, India is now the biggest country in the world population-wise and growing still. All right. We said we were going to keep this under an hour, didn't we? How am I doing on that?
Yeah, blew right through that.
We just blew right through it. Well, we did get to the Intel story. I'm glad we did that. So look, guys, let's wrap this up, shall we? I don't know where we go from here with this tariff story. I really don't. It's going to be a mess. That is a certainty. How big is the mess? Who does it hurt more? Questions. That's all we have. These comparisons to Smoot-Hawley in the 1930s, I don't think they hold water because the world is just so vastly different. This country is so vastly different. Nobody knows. There are informed guesses, but there is no expert out there who knows exactly what's going to happen. Just be careful. We're a day into this crisis. A day. A lot more could happen from here, guys. No, the bottom is not in. There's not priced in all this. But maybe we wake up tomorrow and free trade reigns. Maybe everybody just says no tariffs for anyone tomorrow. Could happen. I don't know. Mish, you got anything you want to throw in there, brother, at the end?
Yeah, I did, but then I forgot it. It happens. Hey, so stay safe out there, everybody.
All right. Here's to middle-aged memory loss. I'm pretty sure I was going to say something about that too. I just can't imagine what that was going to be. All right, everybody. Thank you so much for joining us today. Thank you guys for all the generosity supporting the channel and the super chats. Thank you very much. Also to my Patreon supporters on YouTube and my magnanimous melonheads on YouTube and Patreon. Looking forward to talking to you guys tomorrow for our weekly get-together on Zoom. I always have fun doing that at 2 p.m. Eastern Time. Links down below. Thank you, Mish, and all my other mods for everything you guys do for the channel. Don't forget that like button and that subscribe button. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.